Malaysia and Singapore, two nations linked by more than just a narrow strait. Their histories, economies and cultures have long been intertwined. Now, a bold initiative promises to bring them even closer. The Johor-Singapore Special Economic Zone, or JS-SEZ. It's being hailed as a game-changer, a catalyst for growth. But will it be the breakthrough both countries hope for, or just another ambitious plan on paper? At the 11th Malaysia-Singapore Leaders Retreat on January 7th, about a year after an initial deal was inked, Malaysia and Singapore formalized the JS-SEZ agreement, setting the stage for a new era of cross-border collaboration. In the corridors of Putrajaya, policymakers view the SEZ as a cornerstone of Malaysia's national growth strategy. The goal? 50 high-value projects in the next 5 years, generating more than 20,000 skilled jobs. If successful, Johor could become Malaysia's next economic powerhouse, contributing to a projected $28 billion boost to the national GDP by 2030, potentially rivaling the Klang Valley as the country's leading economic hub. But beyond the headlines and big numbers, the question is, why now?
We are expected to become high-income nation between 2028 or 2029. But for this to happen, we really need to accelerate the restructuring of our economy, moving away from one that is based on commodities and manufacturing to one that creates value and IPs. And for this to happen, we do need infusion of new wave of high-tech investments. And I'm hoping that is a big step for Malaysia and Singapore to really see that there's a lot more commonalities between us.
For decades, trade and investment have built a strong economic bridge between Malaysia and Singapore, and the figures speak for themselves. In 2023 alone, total bilateral trade between the neighbors soared to $79.58 billion. For Malaysia, this SEZ could mean billions in foreign investments, fueling job creation and diversifying its economy. For Singapore, it's about greater access to land, talent, and lower operational costs.
The key really is we have to go for win-win outcome. It's not you win, I lose, or I win, you lose. I think this will not be sustainable in the long term. If companies look at it carefully, plan their expansion carefully, and tap on the complementarity between the two economies, and take advantage of the relative strengths of the two, I think this will allow the project to continue. And the project will continue to evolve.
The JS-SEZ spans more than 3,500 square kilometers, about 4 times the size of Singapore, and is designed to be a regional economic powerhouse. It features 9 flagship zones across Johor, including strategic hubs like the Iskandar Development Region, the Forest City Special Financial Zone, and the Pengerang Integrated Petroleum Complex. And this isn't just about industrial growth. The SEZ is designed to drive innovation across 11 key areas, including several new priority sectors.
And that number is just nice because I think it takes into account what is happening in the world, and it takes into account Johor's strengths. So these 11 sectors, I believe, it's not that much, but more importantly, it complements the economies of Klang Valley and Singapore.
To ensure that happens, Malaysia launched a series of initiatives to sweeten the deal for investors, ranging from tax incentives to infrastructure grants and simplifying the process of setting up businesses. But Johor State Investment Arm JCorp believes that real growth in the SEZ demands more than just business-friendly policies.
There are also, in fact, other factors. For example, availability of infrastructure and also the utilities. And the other important factor is actually the availability of the skilled talents, which is actually required to power whatever sectors, in fact, that is going to be developed.
A similar model has already transformed economies elsewhere. In the 1980s, China designated Shenzhen as an SEZ, allowing it to attract investment, leverage its proximity to Hong Kong, and rapidly develop into one of the world's most important technology hubs.
We hope to surpass this because Johor-Singapore SEZ is very unique in its design, and it's also, the idea is that it must be driven by the private sector. The government will provide a framework, will provide the necessary support, but the private sector must drive the development and investments. And as Johor-Singapore SEZ also has a very unique positioning because it is in the center of a fast-growing Asian region.
With the right execution, observers say the Johor-Singapore SEZ could be a major turning point for Southeast Asia, setting a new benchmark for regional collaboration.
I think it's potentially a game changer in the sense that first, it is a G2G collaboration, and also I think in this current climate where the new US administration keeps talking about tariffs and other kind of unilateral measures, the global free trading system seems to be under a little bit of pressure. So of course, if you have bilateral or multilateral cooperation of this sort, I think it does give a boost for investors.
The Johor-Singapore SEZ has the potential to reshape both economies by driving new industries, creating jobs, and deepening regional integration. But the road ahead won't be easy. Cross-border projects in the past have faced delays, policy shifts, and economic headwinds. So the question remains, can Malaysia and Singapore turn this vision into reality? Malaysia's southern state is undergoing a transformation. Once seen as Singapore's quiet neighbour, Johor is now one of Malaysia's fastest-growing economic hubs. New developments and infrastructure upgrades are reshaping the state, pulling in capital and talent. For Singaporean businesses, Johor offers a compelling proposition, significantly lower costs, just a short drive away. Take factory spaces, for example. On average, renting a facility in Johor costs around 3 ringgit per square foot. Businesses would have to pay more than double of that for such space in Singapore. Labour costs are far more expensive in Singapore too. The median monthly income in the city-state is about 6.5 times that in Malaysia. This competitive edge is already attracting global investors, particularly in the tech sector. Princeton Digital Group, a leading tech infrastructure provider in Asia, saw potential in Johor's booming data center industry even before the SEZ was announced. In 2022, the firm identified Johor as a key investment destination. And by 2023, they acquired 31 acres of land in Sedenak Tech Park to develop a 150-megawatt hyperscale campus.
As all partnerships happen, it takes time to develop, and there would always be a lack of clarity at the initial stages. But very quickly, we've always decided that we wanted the data center to be designed by Malaysians, to be built and operated by a Malaysian team. So in a short span of 6 months, we rapidly hire local Malaysian talent. And I'm very proud to even share that a good 70% of them are actually Johorians.
Johor has been contributing more than 9% to Malaysia's GDP for over a decade, ranking as the country's third largest economy after Selangor and Kuala Lumpur. But now, the state has even bigger ambitions.
We want to make Johor the most developed state in the country by the year 2030. We want Johor to be the most livable state in the country too. Last year, we've announced at least 252 initiatives for budget 2025. And I've given instructions to all my state excos to ensure that we deliver these 252 initiatives, including the JS-SEZ initiatives must be implemented this year.
But while Johor is laying the groundwork, some businesses remain cautious.
I think the smaller businesses who may have some concerns, and their concerns would be higher costs, number one, higher cost of doing business, higher cost of resources, higher cost of labor, land. The other thing is, with many big businesses coming in, our smaller businesses have to remain competitive. So there will be that area that they would have to look at. Businesses in Malaysia, in Johor, will have to adapt in their quest to gain from this entire strategy, this entire initiative.
Experts also emphasize that infrastructure, roads, transport and logistics must match investment pace.
When you look into how Iskandar, Malaysia, was developed, not all 5 zones, in fact, it was actually developed, and executed at the same time. Because we acknowledge and we take cognizance of the fact that some of the zones are relatively undeveloped. It will take a bit more time. We need to review, from time to time on this particular readiness.
That infrastructure challenge extends beyond the zone. Both Malaysia and Singapore have acknowledged that the success of the SEZ isn't just about attracting investments, but also about ensuring the seamless movement of people and goods across the border.
We hope, of course, is to integrate the both region, both JB and Singapore, the both cities are more integrated economically, and to do that, of course, you need good transport system. You need to have good linkages and good integration in terms of our road system and our public transport system. That's why I think these are the way forward, that we have to ensure that there are more collaboration between the Malaysian and Singapore government. RTS is, of course, is a good starting point, but beyond RTS, of course, we are looking at other system integration as well. So I think that the Johor-Singapore SEZ will make the whole area, whole region more prosperous. People can travel more freely, and I'm sure that it's good for both sides.
As it stands, many Johorians commute to Singapore daily for salaries up to triple the amount they would earn in Malaysia. But with the SEZ taking shape in Johor, manpower is crucial.
We have to make sure that job offered in SEZ is really interesting, stopping them from moving to Singapore, I'm sorry to say, and then also moving to Kuala Lumpur. So we want them to reside in Johor, working with the SEZ. So we have to think about the salary, the infrastructure, the safety.
On the ground in Johor Bahru, change is unfolding rapidly. The bustling city stands at the front line of this bold economic venture, and residents wonder how it will impact their lives and future.
Mungkin akan ada kenaikan harga ataupun kos sara hidup dekat sini mungkin akan lebih mencabarlah.
Saya rasa akan dapat banyak peluang pekerjaan, taraf kehidupan yang lebih tinggi.
I think we get to strengthen our ties with the country and bringing new technology, new knowledges for all fields.
It might be good for our Johor side, but another way it could be like things might get more expensive.
To address the rising cost of living, the Johor government is building more affordable housing and providing basic necessities for its people. The state also aims to offer higher salary packages for locals in key sectors and expand upskilling opportunities at local universities to attract and retain talent.
Through our 6 pillars, one of it is basic needs, housing, food. These are some of the things that the state government can do to help the people. We've got to make sure that anyone that stays around this SEZ area must have a sense that they can, it's not just about working here, they can live and also play.
Johor's transformation is gaining momentum, and across the causeway, businesses are watching closely. As economic ties deepen, the changes here will ripple far beyond its borders. The Johor-Singapore Special Economic Zone is more than just a vision. It's a reality in motion. Johor's government is positioning the SEZ as a gateway for investment. Singapore firms in particular are seen as key players in this cross-border venture. The Singapore Business Federation reports that over 190 companies have already signaled their interest to explore opportunities in the SEZ. About 70% of them are Singapore-based companies, with a fair share of them being SMEs. Nearly half of these Singapore companies are looking to expand overseas for the very first time. Now, the remaining 30% are international-based firms, signaling that the SEZ's potential extends far beyond these borders. Some companies have already seized the opportunity, taking the SEZ's incentives as a signal to act fast and establish a foothold before competition heats up. One of them is FarmBite, an online agro-food firm under Johor State investment arm J-Corp.
When I look at the SEZ, I believe it's more than just Singaporean businesses moving into Johor. I believe it's about achieving economic agglomeration. Singapore has always been a hub of global ideas. Johor has always had land and utility rates which is competitive in making this happen. And the way I see it, given the incentives provided by the SEZ, it makes sense beyond just having a Johorian presence, accessing the markets of Singapore.
The company had long been looking for the right partner to expand its operation, and that partnership came in the form of Arkisan, an agri-tech firm from Singapore. While FarmBite offers local farming expertise and infrastructure, Arkisan contributes its technical know-hows in vertical farming, from farm installation to supply and maintenance.
I think that's one of the biggest benefits of the SEZ, it being a springboard to other parts of Malaysia. Companies be able to benefit from a very attractive tax rates. R&D opportunities are also available in the SEZ. Research that can be done, that has already been done in Singapore relating to agri-tech and technology can then be deployed in SEZ, and SEZ can be used as a test bed for systems that can then be deployed in other parts of Johor, other parts of Malaysia.
The SEZ aims to do more than just foster cross-border collaboration. It aspires to be a regional hub. Experts say this could set a precedent for how trade zones are structured across Southeast Asia, creating new pathways for economic growth.
If the SEZ takes off, then it will be a signaling kind of effect on the rest of ASEAN to, hey, do you want to get in the game as well? That this kind of cooperation actually does work. So instead of bilateral, you could, of course, down the road, expand it to something that's a more ASEAN-wide kind of arrangement, and hopefully that will attract a lot more ASEAN partners to come on board as well.
But the SEZ is also emerging at a time when global trade is fragile. Rising protectionism, fractured supply chains, and escalating geopolitical tensions are rewriting the rules of the game. As economies scramble to shield themselves from uncertainty, businesses are being forced to rethink their foundation, where they operate and where they can really thrive.
There's a wave of political uncertainty. The whole US-China tension is resulting in global restructuring of supply chain. I think Johor-Singapore SEZ has a chance to compete for some of these restructuring of global investments. Some of the companies who are interested are some of the Chinese companies, who are looking at restructuring their supply chain so that they can move some of their operations to our part of the world. And ASEAN is an oasis in that regard.
Investor interest alone won't guarantee success. The real test for the SEZ lies in its execution, its ability to deliver on promises not just on paper, but on the ground. With billions of dollars at stake and investor confidence hanging in the balance, the pressure is on policy makers.
Any major investments into those countries, into Johor, for example, is not for 5 years, 10 years, it's even 15, 20 years. So at the back of the mind, I think businesses are always concerned whether there'll be continuing, enduring commitment between both governments, to implement many of these measures.
In the past, political shifts and bureaucratic hurdles have derailed ambitious cross-border projects such as Iskandar Malaysia in Johor. Once heralded as a potential game changer, observers point out that it struggled with inconsistent policies, delayed infrastructure, and change in government priorities. The Malaysian government insists that this time will be different.
There's always this concern that if there is a change of leadership or government or even a different minister, then what can happen to something as ambitious as JS-SEZ? I take comfort from this one truth, which is this is not driven as a personal or administrative project. This is a response to a commercial common sense. The proof of the pudding is to make sure that it realizes its commercial potentials and we are able to get that committed 50 projects in the first 5 years off the ground. And I think once we are able to demonstrate that, then we will be able to convince more and more investors who already understands basically the theoretical synergy and value offering of such economic zone between Johor and Singapore.
More than just an economic zone, it's a test of confidence. The next few years will reveal if the Johor-Singapore SEZ can turn ambition into action and achieve the success it aims for, or fade into another cautionary tale.